Hello and good afternoon to everyone. This is Nak from Go Streams. We're currently going to have another great webinar, and we're just currently waiting for some people to actually join as well. My apologies. Yes, just waiting for a few people to actually join the webinar. I can see that today we do have quite a few people that are new and some new names here, as I see. It should be another great webinar when we'll be covering today Fibonacci retracement levels and Fibonacci ratios. It is basically the golden theory, as we'll cover today. So here we go, guys. Currently showing you guys a few links from streams so that you guys can actually join some of these websites, some of these links, some of these social media groups as well. We have on Facebook and Instagram. So we're just currently waiting for another 1 more minute so that we can get started. I'd like to actually proceed fast today, cover quite a few things with you guys. It's great to see a lot of newcomers as well. Welcome to Streams, everyone. We're always here for you guys. And as I mentioned, through also what you've seen through the invitation, we are covering Fibonacci retracement levels. Some of you guys might know how to use them already, but some of you guys might be new to all of the theories that we'll be covering today. I'll make sure that you guys can understand it, and any questions that you guys might have later on, you can always contact me either via Telegram or email or even WhatsApp. Whoever has my WhatsApp as well, whoever is in my groups. But also furthermore, guys, you can always contact me also through webinars at gostreams.io, which is again where I'll receive the emails with any questions you might have, or even a quick phone call to explain a few things that we'll cover today. So let's go ahead, guys, and start, because our time is always limited, and I know that everyone has a lot of things to do, especially if they're trading. So we're covering Fibonacci theory, the golden theory as it's called. Now, the theory was actually created by a mathematician, a great mathematician called Leonard Pisano Poncio, aka Fibonacci. This is the individual that created the theory, and basically he completed his mathematical theories in 1202. So quite a long time ago, he actually discovered this ratio that is now used widely by all traders worldwide. Now, he saw the golden ratio in many places, especially when it came to architecture. His love and passion was architecture and also music, but he saw the golden ratio a lot in architecture, the 3-to-5 ratio, as we will understand it a bit better, and how to calculate the Fibonacci. I'm not going to get too much into the theory on how to calculate Fibonacci levels. Okay, these levels are essential to traders because it does give good levels of support and resistance. It does give good levels of opening and closing your trades, and it does give you also good understanding on how things are moving in the markets. So the Fibonacci retracement levels, they're based on the numbers starting from 0. Okay, and we'll go through them together. 0, 1, and then 1 again. So if you add 1 plus 1 equals 2. If you add 1 plus 2 equals 3. 2 plus 3 equals 5. 5 plus 3 equals 8, and so on, guys. So this is a series of numbers that equivalent to the Fibonacci numbers that add up to the Fibonacci numbers. So if you're adding, say, for example, 5 plus 8, it's equal 13. Okay, this is how the ratio is conducted. And if we take the ratio of the two successive numbers, okay, that means, you know, taking the any two numbers except for 0 and 1, those numbers we leave out, and 2. So we're starting basically from 3 and 5 in order to create the Fibonacci retracement levels. Okay, we'll show you further down on what I mean with these levels and how to calculate them. But once taking the two successive numbers, that is to take the number and to divide it by the number before it, it will find you the number 1.6180. So say, for example, if we're taking 987 divided by 610, this will give you a level of 1.61, which on your charts, when you're placing your Fibonacci retracement levels, which we'll try and place some today as well in real time, it'll be 161%. Now, this common relationship between every number in the series is the foundation of the ratios used by technical traders to determine retracement levels. Okay, so very important levels are created by the Fibonacci numbers. So if you divide any number in the Fibonacci series with another number from this series, you obtain a variety of ratios. Okay, so these ratios that we'll see, okay, consist of making up 23%, 38%, 50%, 61%, 78%, and 100%, 127, and 161%. Now, these levels here that you will see, okay, are basically the levels that are created by the Fibonacci retracement level. You don't need to know how the Fibonacci is calculated, but what you guys need to know is how to implement the Fibonacci retracement levels, which I'll show you on our chart in real time. So if you're taking the number, say for example, 89 divided by 55, you'll come up with a number with a ratio of 1.61, which is over here. So this is just to show you that any random numbers you take from the series up here, okay, and you divide them basically accordingly, you will come up all the time with the same numbers, okay, that add up. Like 0.23 is basically 23%. 0.38 is basically 38%. So you can go ahead and copy this here, these numbers, and do those calculations, you know, so that you can actually see on how it's done, how the Fibonacci retracement levels are created. It's the golden ratio, it's the golden theory. Okay, this was created by the mathematician Leonardo Fianso. So ratio examples, the key Fibonacci ratio of 61.8% is found by dividing one number in the series by the number that follows it. For example, 21 divided by 34 equals 0.61776, and 55 divided by 89 equals, again, about 0.6179. So you'll always see this ratio when dividing the certain numbers that were shown above. The 38.2% ratio is discovered by dividing a number in the series by the number located 2 spots to the right. So for example, 55 divided by 144 equals approximately 0.3819, okay, which is 38%. The 23.6 ratio is found by dividing one number in the series by the number that is 3 places to the right. For example, 8 divided by 34 equals 0.2352. Okay, and you can do this with all the numbers. So if you go back basically 3 numbers, okay, from the top, you go back 3 numbers, so you have 34 here, go back 3 numbers, it'll give you the ratio of 0.23. You can even do it with 144. So you take 144 divided by 34, again, that will give you that number of 23% or 0.23 as shown here in the example. So moving on with the Fibonacci studies, Fibonacci retracements are popular tools that traders can use to draw support lines, identify resistance levels, place stop loss orders, and set target prices. The Fibonacci retracement is created by taking 2 extreme points on the chart and dividing them vertical distance by the key Fibonacci ratios of 23%, 38, 50, 61, and 100. Fibonacci retracements suffer from the same drawbacks as other universal trading tools. This is because they are best used in conjunction with other indicators. So when you're combining the Fibonacci with other indicators, you get a more how can I say, a more accurate reading. But also furthermore, we also have to need to bear in mind the fundamentals. So sometimes Fibonacci retracement levels don't always work because you might have some kind of big news out there that might affect the markets, it might affect the instrument that you're looking at. And you know, this, you know, that affects the Fibonacci the theory might not come out correctly. So Fibonacci retracement levels work on the theory that after a big price move in one direction has happened, the price will retrace back and return partway back to the previous price level before resuming in the original direction. So you have something that has made a big move. It's moved in one direction. The theory is that you always have some retracements. Retracement meaning you have the instrument move in the opposite direction of the big move. And retracements usually mean only for a short period of time. Reversal, guys, means that something will reverse and go in the other direction for a longer period. Okay, so retracement is just a short pullback for a short amount of time. Now, traders use the Fibonacci retracement levels as potential support and resistance areas. Since so many traders watch the same levels and place buy and sell orders on them to enter trades or place stops, the support and resistance levels tend to become a self-fulfilling prophecy. So remember, guys, in my previous webinars, I mentioned to you guys that a lot of it has to do with demand and supply. So if everyone is buying at the same time, this is driving the price up. If everyone is selling, then they're all driving the price down. So it's the same theory with Fibonacci. Everyone is usually following the support and resistance levels or the Fibonacci retracement levels, and they're all buying and selling usually at the same time. So it is also more important to know that the Fibonacci is a leading indicator. It's not a lagging indicator, and this is why it's so popular amongst all traders. So we'll move on to the next slide really fast. I know that these slides are a bit not to what we expected, but we'll get through some charts as well, guys. Just bear with me. It's just to cover some of the theory behind the Fibonacci retracement levels. So a retracement is a price move in the opposite direction of a prior trend. This is called the cycle. So when you have a trend, one direction, okay, you sometimes have retracements. You always usually have retracements, which is normal. You know, the markets don't only move in one direction, they fluctuate. So we sometimes have some pullbacks during that course of either an uptrend or a downtrend. So the cycle is calculated by measuring the cycle's high and low range and multiplying by the Fibonacci ratios. Okay, and we'll show this, guys, on how to do it as well when jotting down Fibonacci retracement levels. The high minus the low equals the cycle distance times the Fibonacci ratio. So in order to apply Fibonacci levels to your charts, you'll need to identify the swing high and the swing low points. A swing high is a candlestick with at least two lower highs on both the left and the right of itself. The swing low is the candlestick with at least two higher lows on both the left and the right of itself. Okay, so in order to find these Fibonacci retracement levels, you will have to find the recent significant swing highs and swing lows. So the high points and the low points basically of the swing will help us to draw up our Fibonacci retracement levels. Now, when you see something downtrending, you basically need to click on the swing high and drag your cursor to the most recent swing low. Okay, you can do this in all different time frames. Okay, it's wise to have a daily chart, okay, and to put your Fibonacci levels on a daily chart. And the reason being, guys, is because on the daily chart, Fibonacci levels are a bit more accurate. On the shorter time frames, Fibonacci levels are not so accurate because of the short duration of time. A lot of things can happen in the markets, you know, just in a few minutes. You have more movements in minutes than instead of hours or days. When drawing your Fibonacci levels on weekly charts or on daily charts, you can know that they're a bit stronger as support and resistance levels. And once you've drawn those daily ones, you can draw eternally of those levels, smaller time frame levels, such as an hourly and even 15 minutes if you want, to have more clustered, basically, Fibonacci levels one next to another. You'll see what I mean by clustered Fibonacci ratios. So for uptrends, do the opposite. You click on the swing low and drag the cursor to the most recent high. Okay, and this will give you basically your Fibonacci levels, and I'll show you guys how to basically draw them. So the 50% ratio is not officially a Fibonacci ratio, but it was able to sneak into the group and has never left. Okay, we always have also the 50 level right here in the middle. Okay, it works as a midpoint for the Fibonacci. And since a lot of traders use it as well, they rely a lot on the 50 level, 50% level. However, traders often use it because of its tendency of asset price to continue in a particular direction after a 50% retracement. So you see something moving upwards, guys. Okay, we draw basically our Fibo as we see from here, from the low, drag it up to the highest point that we can actually see, and this will draw your Fibonacci levels, as you can see, starting from 0, 23, 38, 50, 61, and 100%. So you can see the retracement that happened. It broke through the 23, it broke through the 38, moved down to the 50. 50 is a crucial area for a lot of traders. They like to use the 50 trade. And you can see as soon as it touches the 50% level, which acts like a support level, it starts to move up again in the direction that it was moving from before. So the price retraces to 50% level and then continues upwards, as you guys can see. So let's move on really fast, guys. Hopefully we can do this in real time as well. So price retraces to 50% level and continues downwards. Okay, this is a downward trend, as we can see. So you take your cursor, your Fibonacci level, you start from the top and then move to the lowest point here, as you can see, the low. And this creates for you your Fibonacci from the 0 to the 100, the Fibonacci levels here, as you can see them, which again, it touches the resistance level and starts to turn back down again. Very small retracement. Okay, this is a retracement. The reversal would be, of course, for much a longer period. So there was a reversal over here, as we can see that it went up. If there was a reversal, it could have even broken against the 100% and then moved on to the 127%, the extensions, which I'll elaborate more on, guys, as we move. So again, another example. Okay, this is a nice example that you can see that the 38% here was actually tested 3 times. Okay, several attempts were made to actually break the 38%, but instead of breaking it, you can see that it was ranging. This is what we call a ranging pattern here. From my previous webinars, guys, I mentioned what ranging is. So from 38% to 23%, you can see a ranging phase. And if you have this, for example, on an hourly chart, or even a, say, 15-minute chart, for example, more shorter time frames, you can actually somewhat scalp, meaning you can take a sell when it touches the 38 level, always near the 38 level, doesn't need to touch sometimes. And once it reaches the 23 level, you can actually wait and see if it's going to move up or continue down. In this case, it moved up again and came down, moved up and came down. So it tested it basically several times. Some traders, a lot of professional traders, they like to scalp. And the way that they scalp is using the Fibonacci, where they have those levels. And as a good example here, you see the fluctuation at 38 to 23%, and then breaks the 23% and moves and continues down on its trend as it was moving before. So scalping can be conducted with Fibonacci levels, but also furthermore, it can also be for longer term trades as well. Moving on to the next slide, guys. 50%. Okay, this is what we're looking at here. Bear with me. I'm just checking to see. This is a downward trend, obviously, here when it's drawn. 50% Fibonacci retracement and natural support and resistance combined to create a powerful tool. Okay, so you can see that the lines, the Fibonacci retracement levels, are strong support and resistance levels. Okay, it's especially the 50 that a lot of traders like to use. They imply that it's quite a strong support and resistance level at 50%. Now, supply is so strong at this confluence that the price cannot penetrate even after several attempts. This is on the 50%, and we can see an example of this, where a lot of the times it touched the 50 and moved back down. This is what we're seeing, a clustered chart. It's what I was mentioning to you guys before. You can have multiple Fibonacci retracement levels, meaning on different time frames. So you draw your Fibonacci on 1 hour, then you can draw your Fibonacci on a 1 hour chart, and then on a 15-minute chart. So you can have it daily, hourly, and even 15 minutes to get a bit of a stronger level, either support or resistance level. And this yellow level line, yellow shaded area, as you guys can see, shows a strong area of resistance. This is because different time frames give you different Fibonacci levels. We can see here that the longer time frame that was drawn, the fib was drawn on, okay, this is probably a daily chart that they were looking at, shows us that it's on a 38%, and the hourly chart that they drew their Fibonacci level shows that it's 61% here, the shaded area. So this is indicating that it's a strong area because you have Fibo levels that are basically connected, that are close to each other. And as you can see on how the chart was moving, how the instrument was moving, it tested this area twice, nearly even 3 times over here, as we can see, nearly, not quite touching that level. But it's just showing that it is a strong resistance level when you have combined Fibonacci retracement levels, also known as nested or clustered Fibonacci levels. So know week and day Fibonacci lines and apply them throughout all the time intervals. Okay, so what I was saying, guys, draw your daily Fibonacci and then place other Fibonacci levels that are 1 hour and 15 minutes or 5-minute charts. Fibs are not lagging, they are leading indicators and thus project a good location for future trades. Fibonacci lines should be treated like zones and need confirmation. Now, an extension of the retracement beyond 100, its most common Fibonacci extensions are 127, 1.38, and 161. If you do them in percentages, so 127, 138, and 161. Now, if the first extension is exceeded, then expect the second extension to also be exceeded, guys. Usually when you surpass 100%, usually this means that it's going to take that direction and continue. So do be aware of those extensions that usually it does follow the way that the trend is. So here's a good example of the extension. You have the 100% drawn over here, has broken the 100% and has moved all the way to 120% level. It's usually the case that it does happen. Once breaking the 100, you'll move down to the next levels, the next extensions. So this is, I think, our last slide, guys. We'll go into real time and show us how to draw a few Fibonacci's. Just get my chart here. As we discussed in previous, support and resistance levels are usually good areas to buy or sell because other traders will also be eyeing those levels like a hawk. Second, since we know that all the traders also use the Fibonacci retracement tool, they may be looking to jump in those on these Fibo levels themselves. With traders looking at the same support and resistance levels, there's a good chance that there are a ton of orders at those price levels. While there's no guarantee that the price will bounce from those levels, at least you can be more confident about your trade. After all, when you're trading, there's strength in numbers. So when you're trading, you should remember that you guys are trading with, it's all about probabilities. That's whatever we do is with probabilities when trading. There's no guarantees. And the higher your probabilities are, the more better your chances that you'll be successful in the long run. So guys, that was it on the slides, basically. I hope you guys understood a bit on the Fibonacci's. We'll just get our charts here open so that we can actually do some Fibonacci retracement levels. We've only got just a few minutes. So going really quickly, we'll look at our day chart. This is on gold, guys. So in order to draw your Fibonacci retracement levels, we can see that it's downtrending. Okay, this is on a daily. We can see that has been downtrending. You try and take your highest level. Okay, let's just zoom out. We can zoom out as well. We can see the highest level that, yes, we did surpass the 2000s, basically, on gold. It nearly reached 21. I remember these times. So just taking somewhere around these levels, dragging all the way down to your lowest point that you can see right over here. Okay, this will give you one Fibonacci level. You guys can see how it's drawn. You see right over here, this is a good level right over here, right here to here. It's been tested. This is a 61%. You see the Fibonacci and how nicely it actually shows us those levels that have actually been tested already. Perfect. And you can also see your 50% level here, 38% level here, which has also been tested a few times. It's tested over here, went up, then came down once it tested. And also over here, touched that level of 50, then came down. But the most impressive move, I think, on the Fibonacci retracement levels is at the 61% right over here. This even from here. 3 times it tested it. Right here, touched this level, went a bit above it, then came down. Touched it again over here, then came down, and then the 3rd time also came down. Quite a strong level. That's 61%. So remember, guys, draw your Fibonacci's. 61% when you draw it on the daily is a strong level, very strong level. I would say to be ready for a sell if it goes just above 1952. Small favorite to be on the sell. So let's do a clustered now Fibonacci where we can go onto an hour chart, which you'll see that some of the Fibonacci levels might actually connect. So an hour, we'll actually try and zoom in a bit. We'll just take it from here, guys. You know, what you see on your charts is what you should be placing. Don't try to zoom too much out, because at the end of the day, okay, zooming too much out your screen, you won't be able to actually place very easily the Fibonacci levels. So we're looking at the downtrend for gold for us. We'll just take that Fibo where you can find it over here, draw Fibonacci retracement levels, just click on it. Okay, everyone has it on their toolbar. You just drag it down to the lowest point. Surely there should be maybe even lower point here. With me a moment, let's just zoom out once. I think that's okay. That should be accurate, somewhat accurate. But as you guys can see right over here, we do have the scenario, this 2 lines over here. There's a small little gap over here, which probably shows that it is a strong level at the 23%. Okay, this is on the short term. And to change also the colors, which I'll show again, we'll just do another one, 15 minutes as well. 15 minutes one, we'll see on how things look. Okay, so we'll get it from up there. Okay, I think that's the best place. And you see the 100% now for this Fibonacci has become basically was 61 on the hourly chart. So this is on a 15-minute chart. So we've drawn on an hourly chart and a 15-minute chart. Now to change the color of your Fibonacci levels, you just go to Charts, Objects, Object List. And if you want to change, say for example, I think this is the hourly one, we can change it to something of a different color like green, and we can change the color also for the 15-minute one into a dark blue so that we can see it. Okay, so basically what's happened now, you guys can see that the charts look a bit messy, but in reality, when you're doing it, you actually understand what you've just done, what you've seen. And the blue line, as we mentioned, is the 15-minute chart. As you guys can see, it's testing it already. Now it's on the 38%. You can go onto a 5-minute chart, and there you have it, guys. We just implemented now the 15-minute Fibonacci retracement level. And you guys can see that I'm just gone now to a 5-minute, and it's just touched it, just tested it right now, and it looks like it's coming down. So it wouldn't be bad to actually take a nice sell position on this one. But we'll take a sell, take your profit somewhere around here, as you guys know, around about here. And you do put your stop loss. You see it's already moving down. This is on gold, guys. It's at 1842 at the moment. Could move down all the way down just at 1839. But even if it doesn't move to all the way down there, I'll just close my position. And of course, we always put our stop loss. We'll put our stop loss around about here, because usually when it breaks, it means that it's going to go up to the next level of my Fibo, which here is a 38% level. The next level would be, of course, 50. Now, the green lines is a daily chart. Do remember that those are very strong Fibonacci retracement levels on the daily, stronger than the minutes ones and the hour ones. But you can also see my apologies, the purple line is the daily. The blue one is okay, my apologies, because I'm just checking now to see. Okay, the purple one is the daily. This is how we've done it actually, because we didn't change the daily one. But the blue one is the 15 minutes one, as I was mentioning again, and it's touched that level, and looks like there's a good chance that it might come down all the way down to the lower Fibonacci level of 23%. Let's see on how it moves. But as I was mentioning, the longer time frame ones are a bit more solid, they're a bit more accurate. It's just that you have to wait longer for your trade. So if you're using, say, an hourly Fibonacci retracement level, your trade should last maybe 3 to 5 hours even, maybe even more sometimes. If you're using a daily chart with the Fibonacci, then with what you do, you might have to wait longer than just a few minutes or a few hours. You might even have to wait a few days, but usually they're more solid. We can go back and see that purple one is the daily. Okay, you guys can see those big moves on a daily on the 61% Fibonacci. All right, then when we're moving towards an hourly chart, okay, we'll just move on to an hourly chart really fast, which is the green line, guys. So again, the blue line is the 15-minute chart, which we will see again shortly. So 1 hour chart, again, you can see those green levels that have been tested right over here. Once just surpassed it, then came down. Again, you see that the shadow here touched that level and came down. And you can see that ever since then it has been coming down. But the concept is the green lines are the hourly chart. So you can also see the 38% being tested again right over here. Tested it, then came down. See how it retraced a bit and came down. So just remember that you usually have some small retracements, some pullbacks on an hourly chart, and usually, as you can see, each candlestick represents 1 hour. Touch that 38% on the green line, which is the hour, and then move down 1, 2, 3-ish, and 4 actually came down tumbling. So if you kept your position open for 4 hours, you would have profited quite a lot. We're seeing here nearly 1,000 points, nearly. Wow, okay, big move there. Big move, big profits, basically, with this kind of a move. And then let's move on to our 15 again. As we can see, 38% level, that is our 15-minute chart, did touch it, going down towards our take profit level, which is great. I'm just going to be a bit patient and take my profits very soon. You can also close your positions even before it reaches the level, guys. But as you can see, it's gone down to these levels a few times from before. This is on a minute chart, guys, 1 minute chart. So each candlestick is 1 minute. And you guys can see that it's tested once, twice before coming down, then went back up again. So let's see if it'll test it a third time. I'm just going to be patient here and let my trade run its course. And not only that, since I'm profiting, I'm going to adjust my stop loss. So even here, if it does move against me, I'm still earning something. It's a small trade, just $6. And if I start seeing if I can adjust my trade if I want to. So basically what I've done, guys, I've adjusted my stop loss, not to incur a loss if it does decide to break that 38% level, Fibonacci level. But again, if it does go up where it was over here, 38%, I might take another sell and see how that goes. And of course, put in my stop loss and take profit. So guys, you all have been great for joining. Thanks for joining the webinar. That's it for today. I mean, that's all the time that we have. I hope that we can have some more of these webinars where we can do even some bit of trading or a bit of a few show and tell on things and theories. But anything that you guys need, you know how to contact me. Again, the email is webinars@gostreams.io, or just contact me directly and we can discuss things in further detail. So thanks for watching, guys, and have a great one and many successful trades to everyone. Take care.